Hello, welcome back. Today, headline is the Southern housing markets poised to become boomtowns. This is an article by Housing Wire and also CoreLogic. It's dated January 2025. So nothing surprise to me, of course. The Southern housing markets are poised to become boomtowns. As a matter of fact, several of the markets that we are promoting for our real estate investors are already right in the middle of the boomtown stage, right at the beginning stage where the opportunities are just massive. Anyway, welcome back once again, and please like and subscribe to my YouTube channel, and also subscribe to our email on my website below in the body of the subscription and description. So you could become a free member of our real estate investment network, so you will learn more about all aspects of real estate housing markets and real estate investing opportunities. See, the takeaway for this particular article showing the graph of the fastest growing metro areas in the US. As you can see, here's the mark. The areas that we are concentrating are in the south and southeast. As you can see, pretty much Texas and Florida. Yes, that's right, Texas and Florida, with the secondary, very fast growth emerging market or in the surrounding areas of the south and southeast. The areas that I like particularly are, in addition to my number one and two, Texas and Florida, and number three is Oklahoma, then Alabama, and maybe a couple of in the Midwest, Indiana and the New York, upstate New York, northwestern New York. Anyway, so the article goes on to say the CoreLogic combines several different indicators that score the share of new construction. New construction, when the national builders and small local builders are building new constructions, you know the area is emerging. You know it is a path of growth. That's where you find home affordability below median price of homes. And then the rental market is very strong. Therefore, investors can cash flow very nicely on an emerging market in the south and southeast. Anyway, this highlight, this paragraph mention the different indicators CoreLogic uses are that the share of new constructions within the last 3 years, that parcels that have had a change in their land use designation within the last 2 years, parcels owned by a builder or developer, and parcels with new construction permits issued within the last 2 years. There are other markets that are shown on this map, although the other markets are growing very fast as well. Boise, Idaho, Las Vegas, and Raleigh, North Carolina, Wilmington, North Carolina, and what have you. However, those markets are the median home price of a single family home in those markets have exceeded way higher than $400,000, which is the median price of a home and in the U.S. However, in the submarkets, in the small town, boom town of the submarkets within Florida and Texas, you still see homes, very affordable homes in a very up and coming areas around $150,000 to $200,000. We talk about new construction single family homes where the rent to value ratio is very strong and the numbers make sense. So that is a up and coming boom towns, if you will. Anyway, let's see what else that comes to mind. The slowest housing markets, on the other hand, according to CoreLogic and Housing Wire, are all over the map. There are 5 metro areas, each in the Midwest and in California and Northeast, is home to the other areas that over time, long term, show the smallest growth. Okay. And so that's pretty much my takeaway. So you can read this article on your own. It's Housing Wire, like I said. It's an organization I follow very closely, and CoreLogic. Yes, they produce a lot of great information. So again, the takeaway is whether you are a primary homeowner or whether you are investors, you search for this type of data, this type of fundamentals, right? And low affordability, low price homes, very high cash flow for investors, that is. So primary homeowners, a lot of you are all over the country are being priced out by the rising, skyrocketing home prices, especially in the past few years during the pandemic, as well as the elevated mortgage rates. We have the lowest affordability rates in the country in more than 3 decades. So a lot of people are priced out of buying primary homes all over the country. So we expect to see migration to converge all over the place. And most people with the highest level of growth is continue to be Texas and Florida and other submarkets in the neighboring states such as Oklahoma and Alabama and Tennessee. We have some nice growth in those areas as well. So that's my takeaway. And if you want to learn more about it, about my perspective, please become an email insider and sign up on your email to become a free member of our Real Estate Investment Network. And the link is on my website below, realestatenetwork.com. Thank you so much for watching, and please like and subscribe if you receive any value from this presentation. All right, so thank you so much. I will see you on the next video. Have a nice day. Bye-bye.